And how do you typically evaluate the founding team of a startup and what qualities are you looking for in founders? Can you go deeper into that?
Sure, sure. So one very what people then start kind of looking at is has the founders done it before, right? Because if he's done it before, then I don't need to kind of in some form reevaluate, right? But it's a very specific sort of a talent which is required, right? A lot of people can build, they can't sell. Initially, the founders will have to sell, right? So can he essentially kind of articulate what he's doing very well is essentially one way to kind of figure that out, right? Second is, can he build a team around himself? We can all hire somebody whom we are essentially kind of giving money at 10, 20,000 and essentially whipping them to essentially do work. But can he build an entire kind of structure where people with knowledge workers can come and essentially build their careers around that person, right? That takes a little different sort of skill. I think I personally don't have that myself as well, right? So it takes a very specific sort of skill to essentially get people and essentially kind of form teams around themselves. The third one is of course the kind of domain knowledge. Given that we are doing deep tech, it can't be that it's a sort of a biotech startup. मुझे भी biotech नहीं आता, आपको भी नहीं आता, मैंने आपके पैसे ले लिए. But there is some small scientist whom I'm paying some salary. He leaves the company. Both of us are dead, right? Because आपको भी नहीं आता कुछ करना, मुझे भी नहीं आता कुछ करना, right? So it has to be a founder who has deep domain knowledge to run that particular startup. That everybody else around him leaves, he can still roll up the sleeves and kind of do something in that.
So, have you heard of family office funds? Today, we are talking to someone who manages a $130 million family office fund and its investments in startups and funds across US and India. Now, he's a seasoned investor and we'll talk a lot about his successful bets. And we'll ask him to look back and see what are the differences between his lot of successful startup investments and the failed ones. What are the top five qualities that investors look for in founders when investing? What are the top three factors that he uses to evaluate deep tech companies? When, why, and how family offices participate in the startup ecosystem. Today, we are talking to Nitesh Agarwal. He's a seasoned entrepreneur, investor, and currently the CIO of Baldota Family Office Fund. This is one of the most in depth discussions I have ever had on an investor and VC's thought process and the checklist. We have discussed a broad range of stuff. End tak dekho and let me know what you agree or you disagree with. Hi Nitesh, welcome to the podcast.
Yeah, thank you so much.
So Nitesh, first I want to talk a little bit about your investment structure at the fund that you are at right now.
Right, right, right. So currently, now we are investing out of a single family office. So the total corpus, which has been earmarked to investing in unlisted assets, right? It's around $130 million. We have
By
deployed
unlisted assets, you mean startups की बात कर रहे हैं हम,
startups, huh?
private companies
Startups.
की बात कर रहे हैं. Awesome.
Correct, correct. But I mean, I'll double click on why I'm calling it unlisted, right? Not just startups, because we invest into both funds which invest into startups and startups directly, right? So we
Okay.
are both directly and indirectly getting exposure into the unlisted asset class, if you will. So out of the balance, two-third we are deploying in the US, one-third in India, and in both the geographies, two-third is where we'll invest directly into startups and one-third through funds. So we have invested in like 20 odd funds in India so far, and 26 odd direct companies, and very aggressively kind of investing every year as well.
Okay. Got it. Got it. And so it is not a fund, and it's a, you're saying it's a family office. Eh? कैसे, how is it
Absolutely.
different? Uh,
Sure, sure, sure. So typically, whenever any manager is taking third party money, right, so he has to then take an approval from SEBI. So that's in the Indian context, it's called either a category 1 AIF. AIF stands for Alternate Investment Fund. So it's either a category 1 or a category 2 AIF. Since we are not taking money from anybody else, right? So it's a single family office with only one single family's money being invested. So it's coming out of a trust structure which is owned by the family, right? So when you are talking about any other fund like Bloom, Chirate, etc., right, they will have an AIF. We are having a fund, right? So to that extent, it's different. However, structurally, for all practical purpose, it then remains the same.
Okay, so you're saying that only the legal side is different. As far as companies are concerned, as far as the money is concerned, the structure remains the same. The thesis
Correct.
remains the same.
That's correct. Yes.
Awesome,
Yes.
awesome. But then there is a lot of negative connotation also typically attached to a family office, right? Uh, why so? And how do we think? How do you think you can change this?
Sure. That's a good question, right? So actually, very, very good question, right? So, I mean, there are like three or four broad reasons, right? Some of them more severe than others in terms of why. Firstly, there is a negative connotation, right? So, as soon as you firstly think of a negative, family office, you think of this old businessman who is in some very old economy business who has a munimji, right? As this finance manager who is this khas admi, right? Who is trusted sort of an advisor. So a founder typically expects neither the patriarch, whose money is being invested, nor the munimji to have any kind of knowledge about the kind of nuances around startup investing and so on and so forth, right? So and then you have the color that you have to go to his office, sit there for 2 3 hours. He'll make you sit and dance up and down. So he'll not act professionally, right? So that's the first color which everybody kind of gets. Of course, it runs deeper than that. A lot of family offices also has kind of family trouble, right? Where one a person invest, the brother says, why the hell did you invest, and so on and so forth, right? So family office managers, and she gets caught kind of in between these kind of structures. It runs more deeper in some family offices where the family office manager also has to manage cash, right? Which essentially kind of flows through the business as well, right? So there are multiple reasons why there is a negative connotation, right? Structurally, it's also because if, let's say, you are putting money everywhere, right? You're putting money in bonds, you're putting money in listed, you're putting money in PMS, you're putting in infrastructure, REITs, and you're also investing in startups, right? So the money manager who you would appoint would typically need to have a bird's eye view of everything, all right? And he will be an asset allocator. Where he essentially say, okay, इसमें 10% 5% इसमें लगा देता हूँ, 10% उसमें लगाता हूँ, right? So he'll be that sort of a guy, where the startup essentially then pitching one specific idea to an asset allocator, right? So there is a gap in between, right? So those are the three four reasons, right? One is, of course, you would expect to speak to an asset allocator. Second, you would expect to speak to a guy who doesn't understand startups. Maybe not behave as professionally. He'll not show up on time. Wouldn't have read the decks and so on and so forth, right? So those are the various reasons why there's a negative connotation. How can it be solved? It can really be solved in kind of two three ways, right? One is by most of the families are now expanding the teams, right? They're not just having this Munimji who's sort of a asset allocator and looking at the regulatory compliance. The teams are also qualified enough to understand what the startup is all about, understand what the business is about, right? Second is essentially just having a kind of professionalism, and the family office managers behaving exactly with the same level of professionalism as you would expect from a fund, who would kind of evaluate opportunities, come on time, be well read, add value, add insights in the conversation, and then be as responsive when it comes to essentially declining it, or as responsive when it comes to essentially kind of the legal paperwork, right? So it'll take time as I think the industry matures. I don't think anything can happen overnight, but as we stand and speak, there is negative connotation attached to kind of family office structures.
नीतीश, हाउ ट्रू आपने इमेज की बात करी, एक नेगेटिव इमेज है, एंड आपने इमेज को बहुत अच्छे से डिस्क्राइब करा. प्रॉब्ली आई आई हैड दैट एग्जैक्ट इमेज व्हेन यू आर
Correct.
डिस्क्राइबिंग इट ऑफ अ फैमिली ऑफिस. तो हाउ ट्रू
Correct.
डू यू थिंक इज दैट इमेज?
So not true anymore. Not true anymore, right? There are around 300 family offices currently, functioning in India. A lot of them are structured very well, right? They are manned very well, in the sense there's a specific team which is looking at unlisted assets, right? So, no, and they are largely from the fund ecosystem itself. They are. I mean, the team within the family office have literally, I mean, been kind of hired, who have in their prior experience been working in the unlisted side, right, in a fund or something, right? So I think there is a general level of kind of maturity on the family office side. However, this has been more recent, right? I would put it more like a 2 3 year sort of phenomena at best. I think it'll still take like 5 10 years before the entire negative connotation might not go away, but I mean, to a large extent, where founders are a lot more open to essentially engaging with the family offices directly, and kind of taking the money would start happening.
And I want to maybe discuss what is how quickly are family offices moving today vis-a-vis say a normal fund या normal VC की बात करें तो या investors की बात करें तो what is the speed at which family offices move?
It's a good question again, right? So very varied, right? So 300 में से कोई होंगे जो छः महीना लगाएंगे, right? कोई होंगे जो फटाफट कर लेंगे, right? So it's again very varied. It's varied because firstly, I mean, the main decision maker will always be traveling, right? In a fund, the main decision maker's full time job is to deploy this capital, right? The in the family office structure. The family members whose money is being managed would be running their own business or would be traveling, right? Second would be the legal team within a family office would largely be, the legal team which is essentially working operationally. The finance team is working operationally, right? In a VC and a fund structure, they are functioning only for that specific reasons, right? So therefore, it essentially, becomes slow. However, funds also take time, right? Funds also take their own time in terms of kind of diligencing, in terms of coming up to decision. So, 2021 was an aberration. That notwithstanding, it takes anywhere between 3 months to 6 months. So, I think that's also enough timeline for family offices to essentially kind of work their kind of way in parallel as well. So I would expect at least kind of 25 to 30% family offices can pretty much kind of work at the same speed as a fund. Rest would be slightly slower. Some would be really very slow.
Okay, understood. And I want to understand कि जो आपने एक image describe करी where say there is a lot of intervention, there is a lot of internal conflict also at times in the decision making process. How has that changed?
Sure,
How much are the family members of the obviously family office involved now in decision making,
sure.
and how much of a decision is the fund manager involved in?
So it in structurally, I mean, in a fund as well, right? There's a team, and then there's an IC, right, which is the investment committee, right, which needs to then finally bless the investment, right?
Mhm.
And I mean, there are cases where the IC's approval rate would be as low as 25%. There will be funds where the IC's approval rate would be as high as 80-90%, right? So it essentially kind of depends. Even on the VC side, it will be kind of fairly varied. On the family office side, also, I mean, typically wherever there are individual people, there's a team which is specifically looking at investing in unlisted. Uh, you would have the team functioning like the kind of a fund, and the family members then would kind of behave like a investment committee, right? On top of that, right, with some sort of a approval or clearance rate, right? Now, in a fund, if they have raised capital, then they are consistently deploying capital over 3 4 years, right? In a family office, given the situation of the underlying businesses of what the family owners operate, and the cash flow thereof, the intent of deployment could vary, right? But given the it's a 10-year journey, most family offices have also evolved to understand that they have to consistently kind of go on deploying. They can't be erratic about अच्छा आज deploy करते हैं कल से नहीं करते हैं sort of thing, right? So that they have stopped doing, right? So the and they've also kind of put governance structure where the families directly are not in some form subverting the kind of process, right? So it is in all manner functioning exactly like a fund would. So a lot of family offices have evolved to that extent. A lot have not. So again, it's sort of like a mixed bag there.
I think from what I understand is that there has been a formal structure that has come into picture now over the last 3 4 years, and that has been my experience as well, interacting with whatever a few family offices I have had the uh, comfort to interact with. But what I want to understand, Nitesh, is कि, uh, what is that stage that you think a founder should approach a family office, and how does one do that? It's a very formal structure now. That is something that has been established over the last few years, but still the lot of founders, a lot of startups would vary. कि अभी family office के पास नहीं जाते हैं. Maybe family offices can come in at a later stage. What do you think would be an ideal stage to
Sure,
yeah.
sure. So currently, and I mean, again, I'm giving my read of the whole situation, right? So founders are typically approaching family offices either at a very early stage or a very late stage, right? So at a very early stage, because I mean, it's like, I mean, most of the family offices start small, right? Would invest, 50 lakhs, 1 crore, that sort of a number. They are very hesitant to essentially, kind of come in when the valuations become very high, right? So they come in very early, or they are approaching the family offices fairly late, right? During, let's say, broadly, let's call it the pre-IPO stage, right? Where the founder started speaking about, let's say, an IPO, and therefore he can still start accepting, kind of smaller checks from family offices, go to them and say, okay, yes, अभी मैं IPO करने वाला हूँ तो आप अंदर घुस जाइए तो 2 साल बाद IPO होने वाला है, right? So those are the broad two kind of areas where founders are currently accepting money from family offices. I would, from a suggestion of when to approach family offices, my sense is that, there shouldn't be any stage in which you are looking at family offices versus VC funds, right? I think it should be the same, as long as the family office is structured in a slightly more professional manner, right? If they are going to start if the family office is writing smaller checks like 50 lakhs, similar, I mean, a micro VC also, there are various micro VCs which write 50 lakhs to 1 crore check, right? So you would approach, let's say, both together, right? Then there are family offices which are writing, let's say, $1 million or $2 million, and then the funds which are writing 1 million, 2 million. You would approach, kind of both of them, right? So I don't think it makes sense to delineate them from a stage perspective. It should be, okay, what's the check size, right? So if they can write the check size at that stage, then they can be approached. Now, family offices do add value because they are strategically involved in businesses, right? So, so it doesn't harm to take a family office sort of a check, as long as the family office will, kind of will be, kind of managing it professionally.
I think before coming to the uh, other side of it, which is how you guys invest, how you guys evaluate founders and all that, I want to talk a little bit about your journey. You have been in the industry for since 2006, right? Since your graduation
Right.
from IIM Bangalore days. How has your journey been since then? And what are the major shifts that you have seen in the startup ecosystem and the industry in general?
Sure. Right. So again, very good question, right? It's pretty much been whatever, close to 16, 17 years now, for me, kind of investing specifically for the unlisted asset class, right? So I've seen, kind of the entire, kind of cycle multiple times, if you will, right? From an India perspective. If I were to just summarize what's the major shift, I would essentially say that it's around, earlier there was significant lack of capital, now not as much. So there were good founders who would lose out, not because they would execute badly, but because there wasn't any money available, right? So I think that part is changing, right? So that's the one macro change. The second macro change which has happened is essentially, earlier there were traditional businesses, which were not like a winner take all sort of business, right? Like a Swiggy is a winner take all, restaurant is not, right? There could be multiple restaurants functioning, but there would be only one Swiggy or one Zomato kind of thing, right? So the other shift which has happened is essentially this whole VC mindset, a winner take all sort of mindset, and kind of understanding that, right? So those are the two major shifts, and I'll go slightly, kind of deeper into, kind of both of them, right? Yeah, let's say in 2003, there were very, large bankers like Bank of America sort of guys, right? They would essentially, kind of approach promoters at that time who were running their own factories or large companies with 200 300 500 crore का turnover होगा, and the bankers would approach कि मतलब there is some guy who wants to invest capital, right? The first question which the promoter would ask, right, कितने टके पे देगा? That used to be like 2003, right? And the banker would say, नहीं यार कोई टके पे नहीं देगा. तो बोला कितने टाइम पे पैसा वापस चाहिए? बोला इसको पैसे भी वापस नहीं चाहिए. तो प्रमोटर बोलेगा कौन है ये आदमी, इसको तो तुरंत लेके आओ, राइट? सो लेट्स गेट दिस गाइज मनी, राइट? They needed to be educated that there is something called as equity, and somebody can essentially partner in your business. It's not only debt capital, right? So that was the day, 2003 odd days, right, where I think in some form the birth of private equity, kind of sort of happened in India. In 2015 also, I think there were just around 50 to 100 odd funds. Currently, there's 700 funds in India, right? So capital availability has gone up. There's a lot more understanding of what this asset class is, in both the, kind of angel ecosystem. There was no angel ecosystem at all. Right now, there's a very budding angel ecosystem. There will be around, I think, 4,000 to 10,000 angels would have written some check at some point in time in one of the startups. Number of startups which were born is around, kind of 200 way back in 2008. Now there are around 15,000, 20,000 startups born a year, right? So it's around, let's say, kind of sort of like 100x jump in terms of kind of activity, right? So I think both sides have matured a lot more in terms of what this asset class is all about. The other shift which I've seen is also kind of me too ideas, right? पहले होता था कि अच्छा ग्रुपॉन का आइडिया चल गया यूएस में, चलो यही कॉपी करके मतलब कुछ तो इंडिया में डाल देते हैं. इवन इन इंडिया, राइट, कि राइड हेलिंग वाला कोई आइडिया चल गया, चलो इसमें मतलब एवरी ओल्ड बिजनेसमैन विल बी लाइक ठीक है इसको कुछ तो कॉपी करते हैं, 5 जन हायर करेंगे, वो एक कोड वर्ड लिख देगा, हम लोग लॉन्च कर देंगे एंड वील एसेंशियली बिकम द नेक्स्ट ओला, राइट? Again, the realization that okay, winner take all business में cannot be me too. It has to be a differentiated idea, right? So now we are seeing lot. I mean, every founder would be a lot better storyteller. Will have identified the very specific niche. Would be working on a very specific problem statement, which will not be competing with the biggies, right? So I think overall, if I were to just sum it up, right, it's the ecosystem has evolved a lot. There's a lot more capital available, right? The another shift, if I were to just at a macro level, kind of mention that, right? Most investors will get an exit only once the company gets bought out, right? Very few companies will
Hmm.
IPO. नाउ पहले 2012 से 15 में कौन बाय आउट करेगा? देयर वर ओनली वेरी फ्यू यूनिकॉर्न्स, देयर वर लाइक हार्डली 5-10 यूनिकॉर्न्स, right? Traditional businesses didn't understand or have a need to essentially kind of tie up with the startup, right? So if let's say I as an investor, you as a founder need to exit, where would we exit? 95% of the cases we'll exit to somebody kind of buying out, finding value in it. Early there weren't any buyers. Suddenly there are a lot more buyers, right? There are a lot more monicons, unicorns, even traditional businesses like Tata essentially kind of buying something like a big basket, right? So your Reliance essentially buying out multiple businesses, right? So suddenly exits are possible, right? So overall, I think if I were to just very high level summarize it, I think the ecosystem has developed a lot more than what it was in the last 20 years, and I think we're just starting to scratch the surface. Over the next 10 years, I think it'll get a lot better from where we are.
I think you correctly mentioned a lot of things. Back when I started my first company back when I was in college. Uh, I think 2010 or 11. I was trying to build a reverse auction, a reverse bidding platform in the e-commerce space. Back then, the only space in India was e-commerce. I remember you mentioning the Me Too factor that was there in startup ecosystem uh, around 5-10 years back. But I think everybody wanted to start in e-commerce space. That has changed. Now even if you are starting in the e-commerce space, it has to be a niche product. You can't be doing what everyone else is doing.
Correct.
I've seen that change myself, and I totally agree with that. But how do you see the startup ecosystem evolving over the next decade, and what opportunities do you see for investors here?
Got it. Cool. While capital has become available, I don't think it's become available enough, right? And I will give the context of, let's say, India versus US, right? The US, in some form, being the benchmark of what startup ecosystem could potentially become. So in India, we have 700 odd Cat 1 and Cat 2 AIs. In the US, there are 20,000, right? So that's the kind of first disparity. The amount of funds which each fund would have, right, will be a lot higher in the US versus India, right? Uh, Overall, for let's say a UHNI in the US, the exposure to unlisted as an asset class would be around 20% of their net worth. Around 33 odd would be for listed, 20 odd would be for unlisted, right? In India, that would be as low as 2%. This is, I mean, there will be some families which are, kind of doing 5, 10%, etc., right? But largely it'll be like, sub 1%, sub 2% kind of thing, right? So we will catch up, right? Would this 2% become 20% over the next 10, 20 years? The answer is yes. Right, because the trends and all the macro trends are, we are following exactly the same pathway which US had followed. Maybe we are a couple of decades behind, right? But we are following that, right? So as the 2% become 20%, the capital availability for founders, for startups, for investors, for exit, all of them will become a lot more vibrant than what it is right now, right? And the other thing also which is happening is, again, I mean, this whole idea to essentially invest into a niche idea, right? So earlier it was invest to list, right? Listing के अलावा कुछ नहीं हो सकता, right? Now it's invest to sell, right? Now that mindset allows you to start investing in niche ideas, right? पूरा market size का 100 crore होगा, पहले कोई हाथ नहीं लगाएगा, right? Or none of the larger funds would touch it, right? Saying the market size is too small, it cannot become a unicorn, right? Lot of investors will be like, ठीक है, नहीं यूनिकॉर्न बनेगा तो फर्क नहीं पड़ रहा, right? 100 करोड़ भी अगर हो जाएगा उसको 500 करोड़ में बेच देंगे, right? क्या फर्क पड़ रहा है, right? So I think overall it's become a lot vibrant, and will become a lot more vibrant as the capital in this ecosystem will essentially kind of go up, as buyers in this ecosystem will go up, as more exits start happening for investors, as startups essentially become a lot more clearer that it has to be a differentiated idea. They're a lot more they've done a lot more homework when they're kind of approaching investors, right? Just because they are spending their next kind of 10 years in that journey. So on both sides, both capital givers and capital takers are becoming a lot more evolved in their decision making.
But do you really think, say, investors and VCs are evolving in a way where they see a 500 CR or 500 million or a 100 million, let's say,
Sure.
uh, outcome or a 100 million exit as a good exit? Because what's happening is that in the investor ecosystem, a lot many times what's happening is that people are looking out for that one or two stellar company that will give out an
Sure.
disproportionately high amount of return, right? But is that thought process also changing when people are investing today?
No, absolutely, absolutely, it is. So it is still largely let's invest to list sort of mindset, right? So it is okay. Market size should be large, right? Uh, but that is again changing. I mean, I know of funds which are smaller funds which are not even thinking around those sort of mindsets, right? Because when you're starting a company to think कि 10 साल में शायद list हो जाएगा, right? There's just zero, kind of predictability, right? It's like, अच्छा ये what is he solving? Is the founder solving something very niche? Is it some decent size? ये नहीं है मतलब uh, whatever 2 crore का market size, right? That's too small, you can't do anything with it, right? Then it'll be a kind of a lala sort of business, right? But it's any kind of decent size. The idea is to first get the guy started, right? Get the guy started, get the PMF out, get the product out, have 5 people who are essentially doing pilots, so on and so forth, right? Because somebody will find value and could potentially kind of buy it, right? I know of funds which have started looking at that. Having said that, it's a transition which will still take some time. But in the next few years, I think even the ideas which are not like unicorns or ideas will also start getting funded.
And what are the spaces that, Nitesh, you have invested in? What are the spaces that have been, and amongst them, what are the spaces that have been highly rewarding for you guys?
Sure, sure,
You have
sure.
had a close to 16, 17 year journey now, right?
Sure. So I will speak about my most recent journey, right? So because initially,
Hmm.
like I said, so when I mean 2006 to 2010, when we were investing, we were investing in very traditional sort of businesses. We used to laugh at funds when they used to invest in Mintra type of businesses, right? Like kapde kaun kharidega online, right? Of course, later on we had to unlearn a lot of whatever we thought we knew, and then kind of had to understand the whole kind of VC game, right? But in the last kind of 3 years through the family offices, we have it's while it's sector agnostic, we are very health tech and biotech sort of focused. So we have done like 5 6
Hmm.
drug discovery companies, we have done 2 3 medical devices, we've done 2 edtech companies, we've done 2 gaming tech companies, we've done one space tech, one robotics, one insurance tech, one health tech, and so on and so forth, right? So it's been kind of sectorally kind of diversified. However, if let's say you ask me personally what is the most rewarding, I would still say kind of health tech and biotech would be a sector where kind of I like a lot. And the reason is essentially any capital, right, has to go beyond just the capital, right? End of the day, if let's say even if the founder fails in what the drug he's trying to kind of come out with, at least there's some knowledge which he has kind of come out in the world. If he succeeds, of course, then he ends up saving lives. And if he kind of does not succeed also, there is some knowledge that okay, ये करने से तो वो drug बाहर नहीं आएगा, right? To try some other approach, right? So and that's also kind of deep tech enough where a lot of funds don't kind of invest, so we don't end up competing a lot for those sort of deals. And it's also intellectually rewarding because each conversation with the founder is extremely kind of rewarding because we end up learning a lot in terms of how the human body works, how the kind of various cells work and so on and so forth, right? So it's sector agnostic, but the biotech is something which I've enjoyed investing a lot.
So you mentioned saving lives and all. So as a founder, what I've realized is that you are able to create a lot of impact, and you are able to measure that impact also. आप बोलते हो हम ये बदल रहे हैं, we are changing this part of the world and this part of the world, and you find a lot of joy in that, which is what drives a lot of founders, because it's a very tough journey. As a VC, I want to understand, how do you, if at all you do, how do you measure the impact of your investments beyond financial returns? I'm pretty sure that you guys are investing in, say, tons of spaces. You can't be saying कि हम दुनिया में सब कुछ बदल रहे हैं. But how do you measure that impact?
Sure. It's a good question, right? So, firstly, I mean, let me just kind of double click on impact, right? And what does it mean, right? So, when mostly people in the industry started talking about impact, they mean the ESG framework, right? They mean the goals which have been laid out by the UN and how it kind of maps to that, right? Uh, since we don't have a regulatory requirement to essentially kind of align to that, we have not structured it from that point of view. However, how we look at impact is, in some form we call our capital R&D capital, right? Uh, again, taking the context of US versus India, uh, India in a lot of ways is behind US, despite having extremely good talent, right? To the extent where I think most of the valley is now being kind of run by Indians, right? So, but in India we are not able to kind of do a lot. One of the key reasons which we believe is because of lack of kind of R&D infrastructure in our colleges. While I was in a tier, just one level below, let's say, IIT sort of college, our labs were, completely, kind of under invested in, right, by the college itself, right? Where I mean, I'll get a reading, I'll go to the college professor बोल रहा है ये reading करोगे तो fail हो जाओगे यार, ये लिख दो 25 आया 20 लिख दो, right? So because the equipment wasn't working, right? So in that environment, we are not used to creating something, right? I mean, my entire kind of experience of an experiment is taking a blue paper, dipping it in some liquid, and essentially the blue paper becomes red, and saying, "Oh, chal litmus test," right? So, but other than that, we've not done much. And the reason we've not done much is क्योंकि equipment ही नहीं दिया गया, right? और अगर equipment होगे तो हम सिर्फ किताब पढ़ रहे हैं जो किसी और ने लिखी है, but we are not coming up with our kind of knowledge ourselves, right? So to that extent, because we are essentially kind of investing in deep tech, we are thereby in our own way, creating some sort of a funnel for R&D capital to flow into companies which are trying to do something in terms of research and development, and thereby trying to kind of bridge the gap in some small way at our end.
So which would be, say, the highest impact R&D company that you have invested in lately, or a company that you remember?
Sure. There is a bunch of companies which is there, right? So there's a company in space tech, which is a company called Skyloom, which has done really well for us financially as well, right? So they're in space tech, right? It's a satellite essentially comprises of five broad kind of things, right? So one is the outer body, second is the thruster, which essentially gets it into orbit. The third one is essentially the power unit, because I mean it has to take power from the sun and distribute it. Fourth is essentially the key sensors, which if let's say it's for surveillance, then it'll have camera or it'll have some RF technology or whatever it is, right? So the key payload. And the last one is essentially the communication unit, which downlinks the information collected by the satellite down to Earth. Prior to this company, everybody was using RF technology to downlink the information. This company started using infrared, and with the claim that the energy usage would pretty much become one third for kind of sending the communication back to Earth. Now, once the satellite is in orbit, the most of the power, 90% plus of the power, is used to just send the information back to Earth, right? Because it's already achieved escape velocity. So, given that this company was able to one third the power usage, the power distribution unit and the power unit could become one third in size. Therefore, the thrusters could become one third in size, and therefore the satellite itself could become one third in size, thereby significantly lowering the cost of anybody launching the satellite. Right. So that one has done really well. Second company I would like to mention is a company called Inito, which is into fertility monitoring device. Since as parents we are essentially kind of having kids later and later in our lifetime, causing various sort of complication. Most of this complication can be solved just by timing the act of intercourse, as opposed to essentially going for an IVF or stroke IUI as treatment. So what this company does is essentially it's a device which clamps behind the phone, and the lady pees on it similar to a pregnancy strip and inserts it into the phone, into that kind of device. This company has figured out the microfluidics to measure LH, FSH, progesterone, and estrogen in a single strip, thereby predicting the exact kind of fertility cycle for women. Largely selling in the US. So in terms of the entire tech, they are cutting edge, way ahead of kind of any other company, including let's say the US, etc. So we are very proud of that as well.
I think as a what I want to understand, you mentioned Anito, you mentioned I think space a
Silo.
company in the space tech space. I believe yeah. So I want to understand how do you, as a VC, how do you prepare yourself to evaluate these companies? Because ये बहुत deep knowledge, deep tech products and
Sure.
that probably I don't know don't come across on a daily basis. You don't have
Sure.
knowledge of also. You don't probably understand all the terms also. How do you prepare to invest and understand these pitches as well as a VC?
Sure. So, at a very high level, there's the framework of what we would apply when we're looking at, kind of sort of any investment, is, I mean, there'll be like a broad, kind of 5, 10 sort of parameters, right? So, one would be the 2030 view. Do we see this problem statement existing over the next 10 years, right? Because a startup is a is a 10-year journey. The second one is essentially what we call why now. So, what is it that got solved in the ecosystem because of which, kind of this company will take off now, right? Couldn't have taken off earlier. For example, I mean, the birth of smartphones allowed us to, kind of give birth to bunch of essentially, kind of startups, which couldn't have been possible if the startup had not existed. And let's say Ola or Uber couldn't have existed if, let's say, the smartphone hadn't existed, right? There are a lot of genetic startups which can only now be born, given that most of us are essentially kind of getting genetically mapped, right? So there's enough gene data for us to solve that, right? Once we get the headset, it'll essentially give rise to multiple of VR sort of startups, right? So there is a bottleneck which gets solved, which thereby kind of leads to a startup in that sector essentially could get born. So why now is a huge sort of a filter for us. The third one is of course founder fitment, right? How fit is the founder for that particular startup, which has a bunch of its own sort of criteria, right? Can the founder sell? Can he scale? Does he have the right pedigree? Does he have the domain knowledge to run it? Are there multiple founders? Does the founder have the ability to take feedback, pivot? Does he have decent stake or skin in the game? Can he raise capital? Can he persevere? The other ones are, I mean, what's the problem statement? The conviction on the problem statement. Is there non-linearity of growth? Does the founder have clarity on GTM? Is the unit economics healthy enough? What's the current traction, right? So, I mean, there's a bunch of very standard sort of items which we look at. Very specifically around deep tech, it's more around reading up around that kind of that topic, right? So we have to do a lot of reading ourselves to get up to speed in terms of what the founder is speaking, right? In most cases it takes 1 or 2 days of intense reading to essentially just start scratching the surface in terms of what the founder is talking about. So we have to do that homework and develop our own conviction, and of course we also take help of external advisors.
Understood, understood. And how do you typically evaluate the founding team of a startup and what qualities are you looking for in founders? Can you go deeper into that?
Sure. So one very what people then start kind of looking at is, has the founders done it before, right? Because if he's done it before, then I don't need to kind of in some form reevaluate, right? But it's a very specific sort of a talent which is required, right? A lot of people can build, they can't sell. Initially the founders will have to sell, right? So can he essentially kind of articulate what he's doing very well is essentially one way to kind of figure that out, right? Second is, can he build a team around himself? We can all hire somebody whom we are essentially kind of giving money at 10, 20,000 and essentially whipping them to essentially do work. But can he build an entire kind of structure where people with knowledge workers can come and essentially build their careers around that person, right? That takes a little different sort of skill. I think I personally don't have that myself as well, right? So it takes a very specific sort of skill to essentially get people and essentially kind of form teams around themselves. The third one is of course the kind of domain knowledge. Given that we are doing deep tech, it can't be that it's a sort of a biotech startup. मुझे भी biotech नहीं आता, आपको भी नहीं आता, मैंने आपके पैसे ले लिए. But there is some small scientist whom I'm paying some salary. He leaves the company, both of us are dead, right? Because आपको भी नहीं आता कुछ करना, मुझे भी नहीं आता कुछ करना, right? So it has to be a founder who has deep domain knowledge to run that particular startup. That everybody else around him leaves, he can still roll up the sleeves and kind of do something in that business. The next one is, of course, the ability to take feedback and pivot, right? There are very few startups which can essentially have the premise the founders start off today, and that continues over the next 2 years, 5 years, 10 years, right? It's mathematically impossible. Most startups will have to pivot, if not once, multiple times. And a pivot could be minor pivots. Pivot could be just the pricing strategy. It could be whether it's a freemium model versus non-freemium model, right? It's a, let's go after ad revenue versus let's go after subscription, right? Let's change the interface. Let's change the just the articulation of what it's solving for, right? Let's just change positioning, right? So it could be multiple small pivots which can essentially be there, and the founder has to take the ability of taking that feedback both from investors, market, customers, team, so on and so forth, right? And constantly kind of sort of pivot, right? So that is in my mind a very very super critical kind of the thing which the founder needs to have. Then the other one is essentially skin in the game and a decent stake, right? Because it can't happen that the key guy who can actually run and drive things is has sub 2% and some sleeping partner. And we used to see a lot of those cases, right? Where there'll be some businessman at the back who's essentially holding 50% to 70%. The entire team is essentially on an ESOP structure of for 20, 30%. And as soon as that guy leaves, the company is dead, right? So those structures we completely stay away. Right, and the next one is of course perseverance, right? So very difficult to judge, but a startup only dies when the founder leaves. Until he perseveres, at least there's hope, right? So there will be multiple times when the startup is near death, multiple times when the founder is like क्या कर रहा हूँ मैं लाइफ में, फैमिली बोल रही है उसे यार क्या कर रहा है तू लाइफ में, पगार कमा रहा था ये, why you doing this, right? So on and so forth, right? And the founder has to persevere through, or the founding team has to persevere through all of that, right? That's a talent which I think is, if I were to pick one talent of every other talent, right, including market size, why not, everything I spoke about, if we can just find out founders who have perseverance, that investor will make a lot more money than every other investor would, right? Because end of the day, as long as the founder is persevering, there is hope, and he will try to. I mean, he will do something or the other with that startup.
I think it's interesting that you mentioned perseverance. Actually, uh, I remember from my YC days, we were part of a program called Y Combinator back in 2021. Uh, so YC partners would show us a list of a few hundred companies that they have invested in the past, and that it has been a decade or so since they last invested in those companies. And they would typically discuss among themselves how many of these companies are successful today, how many of these companies have failed today, and they would discuss the reasons why, to help us and help all the founders there, all the companies there, realize why most of the companies are failing. And the most obvious conclusion was, you- almost all the companies that had failed, and there are a bunch of successful companies, but we're talking about some of the companies that failed. uh, Almost all the companies that had failed were because of the reason that the founders left
Correct.
for some reason or the other.
Absolutely.
The founders quit
Correct.
for some reason or the other. So I think the number one quality, I also believe in the same, the number one quality that stands out, that differentiates whether a company could be successful or not is perseverance, is the fact that whether or not,
Absolutely.
yeah, founders are ready to put in everything.
Correct, correct.
I think we, we talked a lot about the kind of investments that you have made, the kind of impact that you have been able to have. But I want to talk about ROI, about return on capital, ROC. What have been some of the most successful investments that you have made, and why do you think they were successful?
It's a good question. So, in fact, I mean, it's so good a question that I don't think I have an answer to that, right? So, there have been investments which are pretty much, kind of at, 50x plus sort of a return for us. There are, bunch of them, two or three out of the 26 have shut down. Right. So, and I mean, we do try to, kind of audit our decision making as well, right? So periodically, not all the time, right? And I mean, the exact question which you're asking, right? Why is this company successful? Why are the rest not? Right? That's something which we've unfortunately not, kind of have an answer to. The companies which shut down also, I mean, founders were at initial get go very passionate about their problem statement. They were very passionate about solving it and so on and so forth, right? So at least seemingly the data we had, right, it turned out, of course, the founder wasn't right, which is why the founder left and the company shut down, right? I'm just trying to understand what data we had initially and what can we do to change that, right? So the founders seemed, kind of as passionate about it with the domain knowledge. Market size in all the cases seemed kind of large enough. Having said that, if I were to just, kind of pick one quality uh, to, kind of determine, it will essentially be the founder, right? In most cases, wherever it's, kind of shut down, we did discover that the founder had overstated his passion about it and wasn't as passionate about it. Was always, kind of thinking about his exit, was always, kind of thinking about why am I, kind of going through all this trouble. The founder would leave, say, citing, okay, family issues, or would cite saying that, okay, my partner is saying I'm taking too much stress and I shouldn't, and this is going nowhere, and so on and so forth, right? So wherever it's, kind of failed, it's been where the founder is finally, kind of let go. But I mean, to answer your question, what did we know about the company when we were investing? That part we are still trying to, kind of qualify that more with how do we essentially, kind of make that judgment, and unfortunately we don't have a right answer for that.
And I think one of the most, I want to talk a little bit about this. One of the most sought after things when people are starting up for the first time are funds, right? And probably what scares a lot of founders the most is they'll run out of funds. Have you seen any companies in your long uh, time now investing in companies? Have you seen any companies run out of funds and hence they had to shut
Absolutely. Yeah, yeah,
shop?
yeah. So three or four of our portfolio shut down because they ran out of capital. Right? See, until capital is there, the founder will persevere, right? And it just, his perseverance gets tested once he runs out of capital, right? And what does he do? Either his ability to raise capital has to be sufficiently high enough where he doesn't see that phase, right? Or his traction continues in a fairly linear fashion, right? So that capital comes, right? And again, I mean, just pay heed to that, right? Life is rarely linear, right? You will essentially, especially in R&D, there'll be nothing happening and suddenly there's a burst, right? Capital only follows linearity, right? What was the last round? Is there an up round? And within 2 months, what can you show me? And so on and so forth, right? So the various reasons why, I mean, the founder is not able to raise capital. If he's not able to raise capital, what does he do then, right? Does he persevere, or does he, kind of run away, right? That's the, kind of a key thing. uh, is the fear for the founder, right? That's the foremost fear, that he will run out capital, and if he runs out capital, what does he do? For the investors also, I mean, in some form, at an early stage, investors, that's the foremost fear, right? If the founder runs out of capital, most likely he will let go of the idea rather than pivot significantly enough, let go of the team, and still try to, kind of do something with it. Most likely he'll essentially, kind of shut down, and if he shuts down, then you lose your capital, right? So that's the foremost fear, and that's a very बहुत जायज है ये fear होना उसका. So, but I mean, it is what it is.
I think what I and how you mentioned also mentioned that allotment. You mentioned pivots a lot many times. Uh, why do you think I have seen some of the large companies also today, be it Misho, for example, and they ended up pivoting maybe due to the market conditions and all, but at a very late stage. What do you think companies have to pivot multiple times uh, on the original idea to reach to a final conclusive product?
So in some sense, it essentially goes back to the definition of what a startup is, right? I mean, people question like, okay, should Ola, Uber, Flipkart at this size be called a startup, right? They started a long, long time ago, right? But for me, the core definition of a startup is there is no recipe for success, right? So there is, let's say a restaurant, right? There's a recipe for success, right? कि ऐसे दीवार होंगे, ऐसा कलर होगा, ऐसा लोगो होगा, यहाँ से खाना आएगा, whatever, right? So there is a recipe for success, and that's what buyout funds and private equity funds understood. There's a recipe for success. Follow the strategy. I'm giving the capital. We need a very strong execution guy who will essentially run it. Startup is exactly the opposite, right? Startup is essentially a founder being left in the middle of the jungle. It's completely dark. There are no roads, and he's blindfolded, and he's groping in the dark to find an answer, right, of what it is. पहले left में जाएगा, देखेगा वहाँ पे आंसर नहीं है, फिर right में जाएगा, right, and so on and so forth, right? It has to be that, because he's going on a path which is unknown. He's trying to kind of do something new, because the path is unknown. The mathematically the probability that he'll essentially kind of just find the right path in the dark is near zero. He will have to go take wrong turns and come back, take wrong turns and come back, right? So pivot is, how shall I put it, it's a given if it's a startup running, I mean, trying to solve for something which has not been solved before. And as far as stage is concerned, I think it's also agnostic to that, right? Because I mean, आप जंगल से बाहर आने आने आते आते मतलब आप फिर भी रास्ता भूल सकते हैं, right? Because at the end of the day, you're still in the dark, right? As a startup, you could make mistakes in the beginning, or you could make mistakes in the end, right? It's just how quickly you understand those mistakes and kind of get back to the your main path is what essentially drives success. That's also easier said than done, right? You pivot too quickly, it's like अच्छा आप तो persevere ही नहीं कर रहे हो, कुछ भी आइडिया दोगे थोड़ा तो टाइम दो उसे, राइट? आप बहुत लेट कर लोगे, you would burn a lot of capital, right? So again, absolutely no right answer of what's the speed at which somebody should pivot, what's the level of conviction one should have as founders on whatever idea he's chasing, to go after it, right? I think to that extent it's an unknown. But what is definitely, at some point in time, you have to take that feedback and have the ability of pivoting and kind of getting back on right course.
But what has happened is that later you pivot. What happens is that you've raised a lot of capital, right? Which has been the case, which has been a very common case in the recent days. What has happened is that a lot of companies have raised a lot of capital at a very high valuation, especially in the last 1 2 years when valuations were going crazy.
Correct.
And now they realize that the business is not working out. It's not a very high revenue business, or the market size is not enough. In that situation, there are enough fix. What does the founder do then? What does the VC do then? And how do we make the best out of whatever capital you have, whatever I don't know, or maybe you don't have? How do you make the best out of the investments that you have? It's a very common scenario. We need to understand that today almost 70-80% of the companies are in that fixed, maybe 70-80% of the companies at least that raised in the last
Sure.
1.5 years.
No, so I'll kind of break up the question into two parts, right? One is essentially the cyclicity in the VC industry, where prices were bid up, right? Which also happens. Let's say the listed market, companies will go up from 100 rupees to 500 rupees, suddenly crash to 200 rupees, right? So cycles exist everywhere, including, let's say, the P stroke VC industry. However, the cycle has a deeper impact of it, right? Because the valuations are run up, the amount of capital which the founder could raise at the stage he raised was higher than what he should have. So, the reason you're pivoting at some point in time, right, including later stages, that you've not completely figured out your answer, right? एंड उसके पहले उसे बहुत ज्यादा कैपिटल मिल गया, राइट? तो उसने वो गलत रास्ते में बहुत सारा पैसा फेंक फूक दिया, राइट? विच यू आर काइंड ऑफ गेटिंग टू, राइट? So cycles exist everywhere, unfortunately, right? So did was there sort of like a bubble in the 2021 days? The answer is yes. Did companies get a lot more capital than they should? The answer is yes. Did companies who shouldn't have raised capital at all raise capital? The answer is again yes. Right. So would a lot of them die? Unfortunately, the answer is yes again. Right. So similar to, let's say, four stages of grief. Right. Even the startup, there are four stages.
I have one more question. I have one more question. Should companies be doing it again? Let's say, as a company, I'm able to raise much more capital
Sure.
than probably I should be raising. Should companies be raising it again?
See, if the founder continues to have conviction on the idea, he should raise it. इट्स हार्ट ऑफ हार्ट में उसको दिल में पता चल गया कि नहीं करने वाला है ये काम, तो वो कुछ नहीं कर पाएगा उसके बाद। अगर कर भी सकता है तो भी नहीं कर पाएगा वो, अगर वो सॉल्व हो भी सकता है तो उससे नहीं हो पाएगा, राइट? एंड देन एसेंशली हिम रेजिंग अ लॉट मोर कैपिटल जस्ट बिकॉज कैपिटल इज अवेलेबल, he'll take that capital and also blow away. So should founders once he has understood that whatever he was going after does not work, persevere post that? He shouldn't, right? Similar to, let's say, Big Bang Theory, right? Once Sheldon came to know string theory didn't work, right? So he came to know string theory में वो equation में flaw है, तो flaw है, so he should move on, right? But continuing on that, he's just kind of spending more time on something which he shouldn't. Right. So then the founder should take capital, persevere in the business by pivoting, right? Not by throwing money at exactly the same problem statement because he doesn't want to tell his founders or his co-founders, his team and his investors कि नहीं नहीं जहाँ पे वो डाल रहा था वो हो नहीं पा रहा है.
Understood. Understood. I think, Nitesh, those were a lot of topics that we
Yes,
discussed.
yes,
Thank you
absolutely.
for your insights. If say some of our listeners want to reach out to you, what would be the best way? Is it LinkedIn? Is it Twitter? Where are you most active?
So, email and WhatsApp, right? Those will be the two most active ones. LinkedIn, I am, but not as much, in Twitter, not at all. So email and WhatsApp would be the
Uh,
primary mode.
I'll put your email in the show description
Sure,
so that people can reach out to you then.
sounds good.
Done. Thank you, Nitesh. That's all. Thank you for your
Thank you,
time,
Pritesh. Thank you.
and we'll
Really
connect
enjoyed the
again.
conversation.
If you enjoyed this, it would mean a lot to me if you सब्सक्राइब एंड शेयर योर थॉट्स रिव्यूज एंड द गेस्ट यू वांट। एंड आपको ना हमारे कम्युनिटी के लिए लिंक्स मिल जाएंगे नोट्स में। यू शुड ज्वाइन फॉर ब्रिलियंट नेटवर्किंग एंड पार्टिसिपेट इन द